action Tuesday, broke below some pretty major support levels, and it certainly looks like we're testing the bearish bias rather than bullish bias. So a little bit against the market movement at the moment, but nonetheless, we did break out higher. We've closed the gap on the second attempt, and we're now sitting just above the value area high of yesterday. So we're looking to test that. If we do break below that, it might offer up an opportunity for those who are looking to trade to the downside. And let's just pull the chart in a little bit, compress that up. Now, this might look a little bit different to your chart, but that's because this is a volume chart rather than a time-based chart. Each candle forms after 250 contracts. So if we do break below the value area high, we're probably going to look down to test the point of control from yesterday, which was around about the 650 level on futures. Breaking below that offers up probably one of the better opportunities to short, because you've got this low volume area here, and this pocket, and this higher volume node at 600. So it's possible if we break below the higher volume support level here at 640, then there may be an opportunity to get short down to 600. Be careful of traps. Below that, there's also another low volume pocket down here. So there are a couple of opportunities to look to trade short term if we get the break that we're looking for. So that's to the downside. If this is actually going to respect the value area high from yesterday and we bounce from this level, then there's an opportunity to go long from here and trade a bounce. Be careful of your stop losses. You could easily be stopped out on this one. It's not a particularly high probability trade based on the market movements over the last couple of days. So you probably be wanting to look to get at least 3 to 1 on the money. If we quickly take a look through the other charts that we had here, excuse me. On the daily chart, we broke below the ascending triangle pattern. Let me just clear this chart up quickly. We then retested that break yesterday, but we didn't close inside it. And this morning, we also did pierce the underside of that trend line here, but have since been rejected. So the close for today could be quite interesting as we near towards the end of the month. Normally, the monthly open high-low closes are quite important. Last month's high, I believe, was somewhere in the region of 850, 840, somewhere around there. So from here, you know, we've got a good, 180 points or so to try and reach that level. But, you know, the DAX can easily do that in a day if it really was to get moving. But those levels, those monthly levels, do become a bit more magnetic towards the end of the month. We've got 2 days left of the current trading month. So looking for this as a reaction, if this does fail to get back inside that that triangle, close back inside there, then you'd imagine this is going to just continue to move to the downside to test certainly the 12,500 level, which is a pretty major support level, and below that 12,400. Beyond that, watch out below potentially. If this does work out to be a trap, which it certainly did suggest it was going to be based on the open this morning, then you've already made your low here, and it's a higher low than the previous one. Maybe going to continue to build for that, but I think at the moment it's a bit too early to say whether or not that's going to happen. Best opportunity we had was yesterday. We went long, and I sent out a signal to go long here. Might not have been exactly at this point, but it was kind of based on the fact that we were way below the Bollinger Band. But after having this breakout, we'd already met our 100% target, which was this one here, where this kind of pattern, AB pattern here, was equaled on that CD pattern there. So it gave us an opportunity. A lot of people were going to be exiting their trades at this point, and so there was an opportunity to go long, which I did. Sent that out as a signal to reach 650, I think it was off the top of my head, from about 575. And it just so turned out that that level meets my strategy. I like to do this kind of bullish divergence move below the Bollinger Band. When you pierce the Bollinger Band, it will tend to, not always, but tend to target the first standard deviation and or the center line, which can offer 2 potential profit targets. I went for the first one, didn't want to be greedy, and it tagged 650 quite comfortably. So that was a good opportunity yesterday. Go and check that out in the broadcast channel as well, which leads me on to the final part, really. Come and join us on the broadcast channel. Sign up as a free member. You'd have to in order to review this video from the website. Sign up as a free member. You'll get the link to the broadcast channel. Come and join that. You'll get lots of other bits and pieces in there, as well as commentary for these sorts of trades. There's a webinar that's going to be going on this evening about the ASAS order flow software. Come and join that. You'll get the link in that broadcast channel as well. And once you've got that link, click it. It'll bring up this page. Scroll down, click the register to the webinar now. Please, can you do that before it starts at 8 o'clock this evening, so we know roughly how many numbers we've got that are going to be joining us. So that's kind of really the main things for today. So we've got this, we had the breakout already. We're looking to test that. We are at the moment just waiting for a reaction to see whether or not this is going to continue to be a bearish day, or whether actually now we are trapping the bears, and we're going to continue to move on this bullish wave. Bit of patience might be needed just for the dust to settle and wait to see what happens. So that's it for today. Best of luck trading, and I'll be back later on with another webinar and back tomorrow with another video. Take care, guys.